Good afternoon, and thank you for joining us for the second session during Financial Planning Week. Financial Planning Week is an annual initiative by the Financial Planning Institute of Southern Africa to encourage consumers to look at their finances and use a financial planner to assist them to plan. With me today is Thembisa Luthuli, a CFP professional and a member of the Financial Planning Institute. She's going to take us through managing risk in your life. Thank you, Thembisa.
Hello, Rihanna. Thank you for having me today. I'm excited to share some insight with our fellow consumers into discussing and maybe just exploring how to manage risk and basically understand, because for some it can be very confusing. What is risk? How do you manage it? And probably just live a less free life because you would have known that you've implemented things that will actually help you to move forward, knowing that your risk in life have been managed. Again, as Rihanna have introduced me, I am Thembisa Luthuli, a certified financial planner professional. Firstly, let's just talk about what is risk, because many of us, when we think of the word risk, it's mostly associated with fear. It obviously something dangerous, something that has to affect our lives in a all negative way. That's how we usually position risk and think of risk, which is true. Partly true because risk, if we can give it a definition, um, is an unexpected event or unexpected situation that you may experience and affect your life in a way that you could have not planned for in some way. You also did not know when that event will happen and how is it going to affect your life, your family life, your job life. So that's what we can position a risk. We can make a lot of risk examples. You getting into an accident is a risk. Us experiencing COVID around the world was a risk that we could have never imagined. Um, the recessions that happens in our economy are risks that we experience, and we do not have any control over those events. It's events that happen without us having control. But the good thing is, all these events can be managed in such a way that you obviously have a way of managing how much impact can affect you when those events happen. Now, let's start the risk side of your life as a person. So, risk can happen in your life in one way or another. One, death is part of risk. Accidents are part of risk that can happen in your life. Being disabled is part of the risk that can happen in your life. Losing a loved one is a risk that can happen in your life. Losing your house due to floods. We know that some part of the country experience floods in April, and that's a risk that you could have never planned for, or that you could have never imagined to happen, but you can manage the impact that might have hit you. So those are all examples of risk that can affect you. Now, how can you manage the impact that comes with those unplanned events, and also the consequences that they bring into your life as well as your finances? We all know that we've got insurance products, we've got products in the industry that allows us to manage part of the risk that comes with those events. For example, if you experience death, one of the good way and recommended ways to manage the risk impact that comes with death, either you or your family member, or those who are close to you, or those who are dependent to you, is to have a life insurance or funeral cover. so that when that event happens, because you would not know when it will happen and how it will happen and in what position will it get into. It might happen that you get death in your family at a time when you really don't have savings. But if you've got a funeral cover, you've got a life cover, that such risk management tool can actually help you manage the financial impact that death event comes with. I can go on, even explain. We all have cars, most of us have cars. And as you drive your car out of the dealership will never allow you to drive out your car without a car insurance. Why is that? Because they are aware that the risk that you might face in the road will cost them a fortune, because now there will be no car, will also cost you a fortune. There will be no car, but there'll still be a loan in the bank. So then they put a risk management tool such as car insurance, so that if any risk event such as an accident happened to that car, we are able to still pay off the loan at the bank, and maybe then you look at to buying another car. So the examples are endless, but the important principle here is that yes, a risk happen in unexpected times. Yes, a risk comes when we don't expect them. We also do not know when are they going to happen. But we have been given management tools that help us to manage the impact that risky event will have into our finances. As I've explained as well, that risk comes into many forms, and in many chances or in many times, we often associate risk with negative impact. That because it comes with shock, it can give us financial shock. It can put us in an emotional shock or state. But maybe there is some positivity out of the risk. We've now looked at risk in a perspective of an insurance. How then can we look a risk at a perspective of the investment or opportunities that might come with risk? Okay, before we go to that though, I know many people have mixed emotion when it comes to insurance as a risk management tool. Um, but remember, saving for emergencies, such as having just cash readily available for you to take care of situation that might affect you, is one of the biggest risk management tools you can help yourself with. So, what is an emergency fund that you can do? An emergency fund is savings that can be readily available to you at least within 7, maybe if longer, 14 days. Why? Because that money, if an emergency comes, it doesn't wait for 30 days. An emergency want to be solved now. So if you've got an emergency fund, it needs to be readily available for you to access that cash and take care of that emergency. Such emergencies could be a medical bill that a medical aid couldn't pay, as much as the medical aid is a risk management tool as well for you and your family if you get sick. But if it happens that there are some part of the bills that have not been paid by the medical aid, your emergency fund can take care of that. You've got a tire that has burst, your emergency fund can take care of that risk impact that comes with the risk event that affects you. So I hope everyone looks at risk management tools to ensure that mostly in time when you faces risk in your life and an impact comes in your life, in your finances, and in your family, you are able to draw up on a tool that you would have put in place to ensure that you are protected against that impact. Now, let's discuss maybe some positivity that comes with risk, or how can risk provide us with maybe some opportunities if you have managed your risk properly. On the investment side as well, we often hear there is risk in investing. But what is that, and what does it mean? And how can you actually maybe benefit into ensuring that when your risk is managed properly, your investment can actually work in your favor. So, how do we define risk in an investment space? Risk in an investment space can be defined as the volatility or the fluctuations that happens in your investments. All right. So we often know that, especially in the stock markets or in buying property, the risk could be the fact that you buy property in a good area, and then maybe few months down the line, some disruption happen in that area. The risk that comes with that is the fact that the value of the property might go down at that moment. But what are the risk management tools you can put in place? One of the risk management tools sometimes is to manage our emotions, because us not being able to manage our emotions in times of volatilities is the biggest risk that sometimes go above beyond the actual risk in the beginning. So when that happens, the best management tool could be just sit down, relax until all those disruptions have moved, because nothing that stay forever. We've seen COVID, it came, it's still here, but we didn't know that we can go back to the office again when in 2020 and in 2021 we're all cooped in our homes and we thought it's the end of the world. So risk in investments comes with the changes that happens in the world that might affect our investment, that might affect the growth of our investment, that might affect the movement of our investment. But it also comes with opportunities, because when those disruptions happen, you find that most stocks, most properties, or most market shares are actually down because people are fearful. They are fearful of what will happen to the future. So you find all those are cheaper. It might be an opportunity to explore those cheaper stocks, because when all the wind has passed, um, in the future, they will grow again. So that's how often risk can provide an opportunity for you if you are able to manage your emotion through those risky events. And that's the biggest risk management tool you can put in place to control your emotion. But one way that will help you to control your emotion is to teach yourself, consult a professional, have a friend who's a financial planner and is a professional who will let you know when these things happen, who will take you through the journey of making you understand what is going on, how can you manage this, what you need to do, what action you need to take, what action you don't need to take. So having a certified financial planner by your side can be the first biggest risk management tool you could ever have, because that friend is the one who's going to introduce you to all the other tools that I've mentioned. So for you to be able to be financially frugal, to be able to stand the times of volatilities, be able to understand when to take action, the first thing you need to do is get to the FPI website, find yourself a certified financial planner, get yourself these risk management tools, and they need to talk into your holistic financial plan that will give you positive goal structures and goal routines. And that is me for you today. I hope you learn something that will help you in your life, not to always fear risk, but also just be in a position to manage it well.
Thank you, Thembisa. This is such great advice that you've given us today. And I want to encourage everyone to go to fpimymoney123.co.za. Find a financial professional to give you some assistance. You will also find a lot of very useful articles available on the website. And please remember to join us for the other sessions for the rest of the week on the 5th, 6th, and 7th. There is some very valuable tools and advice that you will receive on those days. Please do join us. Thank you, Tembisa. Have a lovely day.
Thank you, Rihanna. Have a lovely day, you too.